If you're new to Canada and you're wondering, do I have to file a tax return or what government credits am I eligible for, then this video is for you. This video is part of a series to simplify finances for those of us that are new to Canada. If that sounds like something that you're interested in, hit the subscribe button and let's get started on today's topic. In Canada, the government uses residency, not citizenship, to determine how someone is taxed, which means even if you're not a permanent resident of Canada for immigration purposes, you may still be considered a resident for tax purposes. So let's take a closer look at 4 different classifications to determine how you are taxed and some benefits that you might qualify for. An ordinary resident is someone who has significant residential ties to Canada, like a home or a family who already lives here. You are required to report your worldwide income, and you are entitled to tax credits and benefits in Canada, which I'll expand on a little later in this video. If you entered Canada as a refugee, you would be considered an ordinary resident as of the date you entered Canada. A deemed resident is someone who does not have residential ties in Canada, but stays in Canada for at least 183 days and previously lived in a country that did not have a tax treaty with Canada. As a deemed resident, you are typically only entitled to the Gst and Hst Credit. A deemed non-resident is someone who has residential ties in Canada as well as another country. Or if you come to Canada and stay for 183 days and the country you came from has a tax treaty with Canada, you're also considered a deemed non-resident. If you're considered a deemed non-resident, you're not eligible for credits and you are required to declare Canadian income. A non-resident is someone who does not have residential ties here and spends less than 183 days in Canada. Deemed non-residents and non-residents are taxed the same way, and you're only required to report your Canadian income. If you are a non-resident, you're not entitled to any tax credits in Canada. Today, we are going to focus on an ordinary resident for tax purposes. To determine whether or not you are an ordinary resident, you need to have significant residential ties. Having either a home that you own or lease on a long-term basis, or having a spouse or children who live in Canada would usually be enough to consider yourself an ordinary resident for tax purposes. That being said, if you don't meet either of those conditions, then you may still be an ordinary resident if you meet 6 secondary conditions. I'll include a list in the comments for you. If you're still not sure, then seek advice from a tax professional who can help determine your tax status. If you're a newcomer to Canada, then the year that you arrive, you will have 2 different statuses for tax purposes. The first part of the year before you entered Canada, you are considered a non-resident. Once you enter the country, you become an ordinary resident for tax purposes. When you're filing your first tax return in Canada, you must declare all of your Canadian income and worldwide income for the entire year. For the first part of the year that you're considered a non-resident, only your Canadian income will be taxable. Your worldwide income as a non-resident will not be considered taxable in Canada. For the rest of the year, when you're considered an ordinary resident for tax purposes, the Canadian income you earn during that time, as well as the worldwide income during that time, are both now considered taxable income. The following year, you'll be considered an ordinary resident for the entire year, and you must declare all of your Canadian-sourced income and your worldwide income. In that year, both your worldwide and Canadian income will be considered taxable in Canada. If you're filing your tax return for the first time in Canada, then you might be wondering what information you need to have and how to do this. To be prepared to file your tax return, I would strongly consider filing with a professional, and you'll need to be ready with some of the following information. Here's a list of a few items you want to make sure you're prepared with when you go to file your taxes. In Canada, you must have your SIN number to file. On top of that, you'll want to make sure you bring identification like your driver's license or passport, proof of all the income you've earned before you entered Canada that year, as well as any Canadian-sourced income. And for convenience, make sure you bring all of your immigration documents. You'll need to be able to provide your exact entry date to Canada, as well as all of your address information before you entered Canada and the various addresses you might have lived at while you've been in the country. Aside from declaring your income, there are some great benefits to filing your income tax, even if you were an ordinary resident for only part of the year. One of those is the Gst and Hst Credit. Depending on your income and your family situation, you could be eligible for over $850. On top of that, if you have children in Canada, you can apply for the Canada Child Benefit, which could provide you with upwards of $6,496 per child per year to help with the cost of raising your children. If you're not familiar with the Canada Child Benefit or how to apply for it, make sure you check out my video on this. And these are only 2 of a few credits and benefits that you can apply for, even if you were only an ordinary resident for part of the year. Just remember, in order to receive and to continue to receive these benefits and credits, you have to file your taxes every year. I would strongly recommend for your first tax return in Canada to seek advice from a professional. This wraps up my video on filing your taxes as a newcomer to Canada. If you have any questions, comment below, and don't forget to hit that subscribe and bell button to stay tuned for more videos on financial education for newcomers. Thanks for watching.